Hello guys, welcome to another follow-up session on the Nifty Wheel trade. So this Nifty Wheel trade is the final follow-up video on this series because we have completed one financial year in this series. So till last time in the last video, what we saw was up to December 2023. So just if you want to watch the video of the previous follow-up up to the December 2023, the link for the video will appear on top of your screens. Okay, so let us go through the trades what I have taken during the January to March quarter, because January to March quarter is the last quarter of the financial year 23-24. Okay, so let us go through the trades. So when we started the January series, which is on 29th of December, and we have taken the expiry series of 4th of January, which is the first expiry of year 2024. When we started that time, the previous one, we have already closed our underlying position, which is 4650 quantity of Nifty Bs, and our P&L at the start of 2024 is about 1,17,842. So this is the same figure you could see in the previous video when we closed this. Okay, so starting to take the trades in Jan 2024, the first one, the index was at 21,700. So since we don't have the underlying, as per the wheel strategy step 1, we took 21,600 PE. So all these formulas are there. This I have explained it last time. So what happens, all these formulas, it could be simpler, but I have just put what I know. So this formula, the figure comes from the Nifty spot close on Friday evening, where the Nifty spot closes, we will take the nearest 100. So if consider that 731 is there, so what we do, we will see whether 800 are near or 700 is near. So 800 is very far, 700 is near. So we take another 100 points away on the downside. So we go and take 600. The call side also I will explain how we will take when we come to the calls. So what we are doing, we are selling one lot, which is Nifty quantity is 50 for one lot. So we are selling the P. So whatever is the premium on the end of the day, I have put in. So if the index closes above this level, so the option will expire 0. This is for the put option. Okay, so that week the index closed above that level, so we eat all the premium, so that gets added to the total profit. Then the next week also similar, so that gets added to the profit, because the whole week nothing moved. Okay, so the index is in the same level only, so nothing has moved, so we eat two premiums. Then comes on the 12th of January for the 18th January expiry. So the spot closed at 21,894. So 21,900 is the near one. So we take the far one. When we go to the far one, so this is more than 50. So we take 21,800. Means if we go down to 50, if that one comes, the strike comes within the 50, we go to the next strike. Okay, I am not taking the 50 strikes, I am taking only the 100 strikes. So just for information, I have already explained this in the first video and second video also. Okay, so what we have done, we have taken 21,800 and we sold 50 quantity. The premium was about 70 rupees, but that week the market went down too much, so it went to 21,462. So what happens is 21,462 when it closed. So 21,800 minus 21,462. So that is going to be the premium which this option will be assigned. Okay, means it's a cash settled option, so it will be cash settled. So when we get the cash settlement, this 70 we will still keep. So what we lose is 337 minus 70, and the quantity is 50. So we lost a good amount of money there, about 13,385 rupees. But once we book a loss in the sold PE, means consider that we are getting a physical settlement of Nifty Bs. Okay. So what we do, we go and buy Nifty Bs. This is the close price for this day, for the expiry day 18th of January. So we go and buy almost close to the days close, say like 329 kind of time, means you can simply put order, so this will get executed. So 237.51, quantity is 4650. The outgo here is about 11 lakh rupees. When we started at about 9 lakhs, but now since the market has gone up so much, so we are at about 11 lakhs. So the profit comes down momentarily because we had 1,23,000 profit. So now since we have booked a loss on the weekly put sell, so we are down to about 1,10,500 rupees. So then that week onwards, what I did, I started tracking the close price at expiry. Say like this 236.15 was the close price at the expiry date of 25th Jan. Consider like that. You can go and check in any of the websites which is tracking the Nifty B's price, or straight away go to the NSE website tracking the Nifty B's price. You will find the same price. Okay. So the next week, 25th of Jan expiry, since we have the Nifty B's with us, so we started selling the call. So the spot on a Friday, it closed at 21622. So 21622, say which 100 is far. So 600 is very near, but the 700 is far from this spot. So we take 700. So the premium what we got was good premium, about 132 rupees. But that week also the index went down. So what we got was 21,352 close on expiry day of 25th of Jan. So we eat a good amount of premium, about 6,600 rupees. So that gets added to the profit. That day, 25th of Jan, the close price of Nifty was 236.15. You can see 462.25 and 352.6. So we have about 90 points of Nifty movement is there. So similarly, we have a down move in the Nifty B's also, 237.51 to 236.15. So in the underlying, we are now having an unrealized loss. So I just wanted to show what unrealized loss we will have when we are eating the profits. Okay. So we ate about 6,600 rupees of premium, but this is a realized profit, and the unrealized loss is about 6,324 rupees. This one we will not realize this loss. We will be selling options above this level. We will never sell options below 21,462, because at 21,462 the Nifty B's price was 237.51. If you are selling a higher call and if that call is getting assigned, or if Nifty expires above that, then the Nifty B's price will be definitely above 237.51, because 237.51 is at which level? 21,462. So now if we are going to sell the Nifty B's at 21,500 or 21,600, definitely the price will be above 237.51. So we will be realizing a profit in our underlying all the time. So that was the reason for it. So 2-3 weeks went uneventful, like the index started gradually going up, like not too much, the index started gradually going up, so never hit our CE price. So we started eating slowly we started eating premiums. But consider that in one of the weeks, like 15th of February expiry, what we sold was 21,900 CE, where the index closed 21,910.75. So the 21,900 call is 10.75 points in the money, but we sold it for 100 rupees. Okay, so what we gained is about 90 rupees. When we are booking profit here, we don't touch the underlying. Okay, this is like a win-win scenario for us. Like we will book the entire profit or maximum profit on the sold call, but the Nifty Bs will also gain a good amount of value. This is almost like a maximum value. Without hitting this call, it can gain the maximum value. So that is this value. Okay, so we will be making profit on both. So every week, since the market started going up, every week the Nifty Bs also started going up. But some weeks you can see that it has gone down slightly. The Nifty Bs goes down, but since we are selling calls, this going down, a minor profit difference will be there, but we will be eating a lot of premium. The 22nd is a good example. The spot on 16th, it closed at 22,040, which 100 is for 22,000 or 22,100. So 22,100 is for, so we sold 22,100. So at 129.4, where the index expired on 22nd of February 22,217. So from 2200 to 22,217 is about 117 points. So 117 is the place where we need to pay back, but we are not booking a loss because we sold it for 129. We still book a very minor like 600 rupees profit here, but this is one of the biggest advantage because you are still having the underlying. From 242 to 245, it has moved by 3 rupees. 3 rupees means 4650 multiplied by 3, you will get somewhere about 14,000 rupees. 14,000 rupees of profit you are booking here. You see, from 24 to 38, 14,000 rupees of profit we are booking here, and we are still selling a call. When we are having a big profit here, the index is above 22,000 and your buy price of Nifty B is in the level of 21,462. So we are almost like 800 points we are up here. Okay, 750 to 800 points we are up here, and we are going to sell a higher call from the spot. So even the market goes down little bit, we are not like too much affected because we already gained a lot, and now we are just eating premiums on call. And the higher call hits means you will be selling your Nifty Bs at a much higher level of index than where we purchased. Like we purchased at 21,462. Even like this gets hit, where we will be selling our Nifty Bs, we will be selling our Nifty Bs at 22,217. Means we bought at 237 and we will be selling at about 245. Means it's about like 8 rupees to 9 rupees we are going to sell. 9 rupees multiplied by 4650, you will get somewhere about 38,000 rupees profit. And in this call, how much we will lose? Peanuts. Because say that we will lose about 2,000, 3,000 rupees on this call, or say that we will lose about 14, 15,000 rupees on this call, but still we are going to book a very good profit here. Okay. Then similar case happened in 1st of March, 7th March expiry. So 22,400 is the call I sold for about 133 rupees. The index closed well above 22,400, 22,493. So 93.55 is the loss on the call, but the call was sold for 133 rupees. So here about 40 rupees of profit was there. So that is why we did not close the underlying buy position. Okay. Then couple of weeks, like last 2 weeks, the index did not move anywhere. So it went up to like 22,493 is about 22,500, right? So we got about 248 is the max where it went. Then couple of weeks it started coming down slightly, like 22,146, 22,011. Then today I am recording this on 28th of March because we are closing this series. I want to make a video and then show the closure what we have done. So 22nd of March I took the position. That day, that was a Friday, so 22096 was the index. That was the close of the index on 22nd March. So the expiry is on 28th of March, and here which one is for, which 100 is for? 22,100 is only 4 points. So 22,200, another 100 points away. We took 22,200 CE, sold 50 quantity at 87 rupees. Today, you know where it closed. So it closed at 22,326. It went up to 22,520, 530. Then it came down because today being a quarterly expiry, monthly expiry, and a yearly expiry. And today Sensex also expired because tomorrow is a holiday. So that is why means Sensex expiry was also here. That added to some more volatility. Plus there were some news flows regarding like RBI is allowing the alternative investments fund to reduce their contribution and they can put it in the equity. So that is what has driven a lot of the financial company stock prices going up, especially Bajaj Finance, Bajaj Finserv, and other finances like banks, HDFC, ICICI, all these started running up because of that. But at the end, there was a huge profit booking came from the higher levels because by the end of the year, many of the bigger institutions, they would like to book the profits and start the next financial year fresh. Many of the companies will do that. So that was one of the reasons where a huge profit booking came at the end, and then Nifty, it was like 400, 450 points up and it came down to 200 points up only. But today index closed in the very good level. So there what happened is 87 rupees is what we sold the call, and the call when it expired ITM, so 126.9 because the index closed at 22,326.9. So 126.9 is the outgo from our side. The money came in was when we sold the call, it came in was 87. So the difference is the loss. So we lost about 2000 rupees. So when we book a loss on the sold call, what we do? We will close the underlying. So we sold the Nifty Bs and today's close price was 246.96. So then how much amount we got? 43,942.5. We lost about 2000 rupees here, but since we hold the Nifty Bs from the level of 21,462, so it has gained about 900 points. Gain was there, so all the 900 points were captured, and then the final close of the Nifty Bs is about 1,93,000 rupees. This is the closure for the financial year 23-24. It started in the beginning of financial year 23-24, which the first expiry is 6th of April 2023. I have kept track of each and every transactions here, and we are ending the series on 28th March 2024. This is the last expiry of this financial year, and the gain what the wheel strategy has given is about 1,93,000 rupees. So I have given you a return comparison for the Nifty as well as the Nifty wheel. You can see a big difference here. If you purchased Nifty Bs at this level like 17,359 and held it, no need to sell a call, no need to book loss, no need to like keep track of it, don't do buy and sell, nothing. Just go and buy Nifty Bs for much lesser amount. This is a little bit bigger amount. You would have purchased it for about 8,50,000 rupees or 8,60,000 rupees. just keep that Nifty Bs and then sell today when the market is at this level. How much gain you would have made? You would have made about 28.6%. So this is the return of the Nifty. Okay, this is the return of the Nifty. Nifty has given a return of 28.6% this year. What Nifty wheels have given is 17.48% only. So there is a difference of about 11% here. 11% between Nifty and Nifty wheel. Why this difference came? This difference will be there when you have a bull market. Okay. What is a bull market? You start from a lower level 17,359 and the market is very bullish. If the index is going 28% in a year is very bullish. Okay. So generally equity, how much it will give? Any equity you take, index or anything you take, equity will give you about 17 to 18%. So this is the average yearly return of a equity. Even the index, if you average everything, it will give 17-18%. Okay. Mutual funds will give about 14-15-16%. That is the average return. FD how much will give, you will know, means you know it's about 6.5-7% is the FD rate. Okay. So the mutual fund gives double and the index or equity, direct equity will give 1.5 times of the FD. This is what is the general calculation. But this year the market was heavily up. It went up to 28%. But if you see the Nifty wheel, it has given almost the equity returns. Okay. If you have equity means like all the big stocks like Reliance, HDFC Bank, ICICI Bank, Infosys, TCS, like these big stocks, you start buying and you keep, the average return what you get per annum will be about 17-18%. If you include the dividends, it will be slightly higher. Okay. So the Nifty wheel strategy, it has given the returns of almost equal to the equity returns, but the index has done extremely well this year. So the index has gone up by about 28.6%. One of the much better years. This year was one of the much better years. Let's see next year. So this year, why this difference came is because the market is bullish. When the market starts from like 17,300 and it closes at about 22,300, consider that you have got about 5,000 point gain in the market. Okay, like 17,300 to 22,300. So it's about 5,000 point gain. So when market gains by 5,000 points, all the strategies what we do based on the index, it will give a lesser return than index, because most of the times what we are doing, that we are eating premium on the PE. Okay, when we are eating premium on the PE, the index is moving up. Okay, that gain we are not taking. The premium what we are eating in the PE, that will not entirely compensate on the growth in the index. Okay, that is why the return is slightly lesser, and this scenario will come when the market is very bullish. If the market is super bullish, these returns will be much lesser also. The market needs to be range bound or mildly bullish, then this strategy will give you a very good return. If the market is bearish, this strategy will give much lesser return. Means the wheel strategy is designed for a mildly bullish market. Last year the market was very bullish. It was very good. The equity should have given, like if the index is giving 28%, the equity would have given about similar, like 25 to 30% should be the index. Let's see how much is the portfolio. Yeah, portfolio is giving good returns, about 53% return, but this is like 2-3 years of portfolio, not this year. I have started the year to date growth. I have started. So once I am finishing this, then I will give you the year to date growth at 2024 end. Okay, because 2024 start prices I have put. This is the price of 2nd of January price I have taken. Okay, this is the price when we started this. In between I have put in something, those I am tracking it separately. So everything put together, I'll put average price and then we will see how much growth it has given in a year. Say consider that each stock I am buying one share, then I'll consider the average growth of this one with all the quantity, everything average I will consider. Okay, let's see means how much growth it is giving. So this apart, the returns are here. It has given nominal returns. It is not like a huge super duper sure short strategy return or anything. It has given a nominal return because the market is very bullish. So don't go only by this scenario. If you go and buy the Nifty Bs and today market is at 22,000, and by end of this financial year, if the market is still at 22,000, you have no returns. Okay, but if you do the wheel strategy, you would have got some returns. Okay, better than if you are just holding the Nifty Bs. If the market goes up, that is altogether different story. Nifty Bs will definitely give good income because the of this PE ones. If the PE we are eating the premium, but the index kept on going up, then the PE never gets hit and you are missing the growth in the index, but you are only happy eating the premium. The difference comes only from there. Okay. Plus, there is one more difference is there. Consider that the market went up. I'll show you a CE hit. Okay. Say from 18,771 to 18,972. This is 200 point gain, right? The 200 point gain we have not realized. We have realized only 100 points because we sold 18,800 call, that is for 40 rupees. That I think that week there was some problem. How we get only 40 rupees when the like 18,665 to 18,800 I got only 40 rupees. Generally here you should get somewhere about 80-85 rupees. That is what generally we get. Probably the VIX was very low that time, so we got very narrow range to get. But that week the market shot up by 200 points and the 300 points, from this to this 300 points. So the loss was here. So what has happened, what we could get is only this 40 rupees. All the rest of the growth in the index we lost and we booked the loss. Everything we gave back. Okay, so there also there will be a negative, so which will affect this return. Okay, so I am very happy with how this has worked out. So the Nifty return is about 28.6% and the Nifty wheel return is about 17.5%. So the difference is about 11%. So the 11% is a significant difference. This is mainly because the market was very bullish. So if you have bullish strategies means you have a bull call spread, or if you are doing call calendar with a bullish view, call diagonal, call calendar with a bullish view, you will make a good amount of money. One of those strategies, I will just show you what I have been doing. There is a separate video in this series. So this is the calendar trade, which was again taken in the beginning of the year. So I started sometime in November. I'll be closing in November. So it will be November to November. So 20,000 CE. The bought price is at about 1,875. Right now it is running at about 3,485. First week lost heavily because the market moved 500 points in the first week. So lost heavily. Then rest every week, including this week, already almost gained all these losses. But the main buy, the bullish view, the main buy is still running at very good profit. Already means I have achieved my target. My expectation was how much I paid for this. This is paid 93,750. I want 25% of it, which is 23,400 rupees. That I have already achieved. So right now running at about 75,000 profit. So such strategies, having a bullish view on the market, like basically it is a long-term call buy and weekly call sell. You can see all C's, long-term call buy and weekly call sell. So this is what I've been doing. So I have just kept the 4th April ready, so we'll be doing that soon. Probably like Monday the market will open. That day I'll take this one. For this there is a separate video. You can watch that video. Okay, so that's it for now. So you have seen how the Nifty wheel strategy follow up. This is the final follow up for the financial year 23-24 for the next Nifty wheel. Right now I am closing everything, so right now it is not there. I don't have underlying, I have cash only. Okay, I don't have underlying, I don't have any options open, so I am closing this series. For the next series, when I start, I will post a video on that. Signing off, this is JR. May the markets be with you. Thank you. Bye bye. Thanks for watching. If you like our content, please subscribe to our channel, like and share the video. Thank you.